evidence is building that BlackRock,
Yeah.
maybe actively preparing to fork Bitcoin, followed by you'll take the version we approve or you'll be punished.
Welcome to another deep dive. Today, we're plunging into, well, a really fascinating set of sources.
Yeah, fascinating and maybe a little unsettling too.
Definitely. It's all about the future of Bitcoin and some very powerful players in the traditional finance world potentially trying to shape it.
That's right. We're looking at this core tension, these claims that huge corporate giants might be trying to, exert control over what's meant to be a decentralized asset.
Exactly. And we're drawing heavily today from a YouTube transcript, specifically from the Simply Bitcoin channel, to really unpack these allegations.
Yeah, some pretty significant claims in there.
Our mission really is to explore these ideas head on. The allegations that BlackRock, the world's largest asset manager, might be strategizing to, well, fundamentally change Bitcoin.
Or even destabilize a major holder like MicroStrategy.
Right. So we'll break down the alleged methods, the principles at stake, and also, importantly, how Bitcoin's own design might be its best defense.
Absolutely. There's a lot to get into.
Okay, let's dive in.
So to understand this sort of centralized vision that's being alleged, we really need to start with the Bank of International Settlements, the BIS.
Ah, yes, the central bank of central banks.
Exactly. And they've officially proposed this system. It's about scoring every single Satoshi.
The smallest unit of Bitcoin, yeah.
Right. Scoring it from 0 to 100 based purely on its transaction history.
Okay, so let's break that down in plain English. What does that actually mean for someone holding Bitcoin?
Well, the implication is if your Bitcoin gets a low score, maybe because of where it's been, companies could refuse it. Governments might flag it.
So it creates two tiers, like clean Bitcoin and dirty Bitcoin, as the source puts it.
That's the idea. And that fundamentally challenges Bitcoin's fungibility, doesn't it? The whole point that one Bitcoin should be the same as any other Bitcoin.
Like $1 bill is the same as another.
Precisely. And the source makes a really interesting point here. Using an analogy, it says, Bitcoin isn't a bag of marbles, it's UTXOs recreated with every block.
UTXOs, unspent transaction outputs, right, like the change you get back.
Exactly. They're unique and constantly being recreated. So the source argues you can't actually permanently mark a specific coin, technically.
Interesting. So if it's technically maybe not feasible, what's the point then?
Well, the source suggests the goal isn't necessarily perfect technical implementation, but controlling the narrative, defining what counts as acceptable Bitcoin.
Okay, and this idea of control, of acceptable Bitcoin, this seems to lead us directly to Larry Fink, CEO of BlackRock.
Right, who's also now co-chair of the World Economic Forum.
And he's been quite public, hasn't he? There's that quote about forcing behaviors within companies. He said, behaviors are going to have to change. You have to force behaviors. And at BlackRock, we are forcing behaviors.
Yeah, that's a direct quote highlighted in the source. And when you put that together with the BIS proposal,
It starts to pick a picture.
well, the source describes it quite starkly. They call it a potential vertical merger between government, finance, and approved technology. The argument being, this isn't just, speculation anymore. It's a visible strategy to consolidate power.
A very different vision for finance indeed.
Which brings us neatly to this really crucial distinction the source makes. It's about the difference between Bitcoin held in an ETF
An exchange-traded fund, yeah.
versus Bitcoin you hold yourself, self-custody Bitcoin. Understanding this is key to grasping these two potential paths for Bitcoin.
So what is ETF Bitcoin according to the source?
It's described as basically just price exposure held in Coinbase custody. Critically, it means no keys, no withdrawals, and no verification.
So you don't actually hold the Bitcoin.
Exactly. The source uses a great metaphor. It's like renting a ticker.
Yeah.
You see the price, but you don't have that sovereignty over the actual asset. Someone else controls it.
Okay, so let's unpack this fork idea in simple terms. We got two versions emerging.
That's the argument. Version A, that's your self-custodied, censorship-resistant Bitcoin. You hold the keys, you control it.
Right.
Then version B, the ETF Bitcoin, which is described as regulated, remote-controlled, OFAC compliant.
So same price maybe, but fundamentally different things. Like owning your own car versus a rental with restrictions.
That's a good way to put it. They might look the same on a price chart, but they embody, as the source says, completely different principles.
And there's a historical parallel mentioned.
Yes, the source draws a direct line to gold ETFs. They say gold ETFs did the exact same thing and killed gold's utility as that sovereign physical asset people held themselves.
So the fear is the ETF version could sort of dilute or even replace Bitcoin's core purpose.
That's the concern expressed, that it becomes just another regulated financial product stripped of its decentralization and sovereignty.
Okay, let's shift gears a bit and talk about a major player, Michael Saylor and MicroStrategy.
Right, huge Bitcoin proponents.
Huge is an understatement. Their holdings are massive. The source mentions they're approaching 3% of the total supply, 629,376 Bitcoin currently.
And Bernstein Research apparently thinks they might aim for 1 million coins. It's quite something.
And the source describes this not just as corporate treasury, but as a sovereign Bitcoin treasury. That's a powerful phrase.
It really is. And it positions them almost like a nation state in terms of their Bitcoin strategy, which raises an important question.
Which is?
Why might a financial giant like BlackRock view MicroStrategy as a problem?
Good question.
The source's take is pretty blunt. They don't want competitors, they want control. And MicroStrategy's massive self-custodied stack could be seen as, well, a competitor to that control.
Okay, so how might BlackRock theoretically exert pressure? The source details a couple of alleged ways. The first one involves MicroStrategy shares.
Right, the MSTR stock.
Yeah. BlackRock owns over 5% now, which you might think is bullish.
But the theory's different.
Exactly. The source calls it a potential stealth liquidation. The idea is BlackRock could, at a strategic moment,
Dump their shares. Just sell off their stake in MicroStrategy.
right, and the intended effect.
To trigger a massive sell-off in MSTR stock, cause panic, maybe create a liquidity crisis for the company itself,
Forcing MicroStrategy.
to potentially have to sell its Bitcoin to raise cash and survive. And guess who might be waiting to buy that Bitcoin cheap?
BlackRock, according to this theory, a stealth liquidation indeed.
It's a complex, multi-step potential maneuver.
And then there's a second alleged method, which is maybe more direct.
This one involves targeting the price of Bitcoin itself.
How so?
Well, the source suggests BlackRock could use its immense financial firepower to temporarily dump the price of Bitcoin.
Okay, why would they do that specifically in relation to MicroStrategy?
Because MicroStrategy has leverage. The source outlines this danger zone. Around $70K Bitcoin, they're fine. At $60K, things get a bit concerning with their leverage.
But the real pain point.
Around $50. That's where, according to the source, MicroStrategy could face serious margin calls and even real default risk.
Oof. So the alleged strategy is?
Crash Bitcoin into that $50K zone. Force MicroStrategy into a desperate situation. Maybe force them to sell Bitcoin. Then BlackRock could potentially acquire that supply at a discount.
And then repump the market afterwards.
Exactly. The source describes it as brutal, but potentially strategic from BlackRock's perspective, aimed at consolidating Bitcoin supply.
Okay, these are some pretty intense scenarios. So what does this all mean for you listening to this? Is Bitcoin doomed to be controlled?
Well, despite these concerning possibilities, the source also offers a very strong counterargument. It emphasizes Bitcoin's resilience.
How so?
It points to history. Every single centralized Bitcoin fork has failed. Think Bcash, BSV, the source calls them, dead.
Why did they fail?
Because, the argument goes, markets always chase the most secure, the most decentralized asset, and nothing beats Bitcoin in that regard.
Right.
Wall Street can fork the name, but they can't fork the incentive structure.
That underlying game theory that makes Bitcoin work.
Exactly. That core design is incredibly resistant to these top-down control attempts.
And Cathie Wood's perspective, which the source highlights, seems optimistic too, right?
Yeah, she notes Bitcoin is actually becoming less volatile as more long-term investors hold it.
And she sees significant upside potential.
She suggests it could multiply in value by 15 times in the next 5 years. That speaks to a belief in its fundamental strength and growing adoption.
So it's not just about resisting attacks, but about inherent strengths.
Absolutely. The source emphasizes Bitcoin is a new asset class, a truly global monetary system unlike any other digital asset. And crucially,
The network.
it's backed by the largest computer network in the world. Its core protocol, Layer 1, has not been hacked since 2009. Plus, it's native to the internet. That's huge.
Very hard to shut down something truly internet native.
Which all circles back to what individuals can do, according to the source, how you can navigate this.
So what's the ultimate defense against these potential centralized pressures?
It's pretty clear from the source. Self-custody, run a node, hold your keys, and opt out of Wall Street's Bitcoin with KYC compliance baked in.
Taking back control.
Precisely.
Mm.
It puts the power back in your hands. Which leads to maybe the most provocative thought from the source.
Go on.
The real fork isn't in the code, it's in your behavior.
Meaning?
Meaning, you have to decide, do you hold the real thing, the censorship-resistant asset you control, or do you just own a ticker? Effectively, maybe one with a BlackRock watermark on it. That's the choice individuals face.
Wow. That was certainly a deep dive. Some really intense claims and counterclaims there about Bitcoin's future and the influence of these big financial players.
Definitely a lot to think about.
We really hope you feel a bit more informed now, equipped with the details from this source to, think critically as these things continue to develop.
Yeah, understanding these different viewpoints, the underlying principles, it's so important in this space, especially with how fast everything moves.
Absolutely. So if you found this deep dive valuable, please do remember to follow, like, and maybe share it with others who you think might find it useful.
It helps get the information out there.
And for more from the channel we discussed today, you can follow What Bitcoin Taught Me basically everywhere: Twitter, X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn.
Check them out.
Thanks again for diving deep with us. We'll catch you next time.